This month, we delve into the world of crypto. Now, when you think cryptocurrency, sub-Saharan Africa doesn't naturally come to mind. The region accounts for the world's smallest share, making up just 2.7% of transactions between July of 2023 and June of 2024. But momentum is growing. When it comes to global adoption, Nigeria is second only to India. Ethiopia, Kenya, and South Africa are also major players. And while crypto trading is still illegal in most African nations and trading activities are closely monitored by central banks, some countries are passing laws to regulate crypto exchanges. And as regulation improves, appetite for crypto is growing, especially for stablecoins, which account for almost half of the region's total transaction volume. Because they track the dollar, they're becoming a popular workaround for companies stymied by currency shortages on the continent.
Stablecoins now have a market cap of around $250 billion, $5 trillion worth of transaction volumes were settled last year, estimated, and about 50% now of blockchain activity relates to stablecoins. So definitely there's significant upward momentum, and particularly in Africa, where also, stablecoins now account for about 50% of blockchain activity.
Can you talk about what the volume is, though, that Yellow Card is seeing? Because your company is still about only 10 years old. What sort of pickup have you seen over the past few years?
Yeah, so a lot of pickup, right? We've processed about $6 billion worth of transaction volume in the last several years. 99% of that is stablecoins. The reason for that is in Africa and other emerging economies across the world, stablecoins provide a real-world solution to many problems faced by financial institutions, businesses, and even individuals.
But why then are we still seeing some pushback in some countries across the continent then, Craig?
Africa is probably one of the most progressive places when it comes to digital asset regulation. You have 7 or 8 places on the continent that already have an established digital asset regulatory framework. You have many others moving in that direction. I mean, just this year we had in March, Kenya, Zambia, and Rwanda published draft legislation. You also even have Morocco, where crypto transactions have been banned since 2017. They recently put draft legislation to lawmakers, and the central bank governor there has said that by the end of the year, they should have a regulatory framework for digital assets.
But has Yellow Card, though, seen the same amount of reception? Because Yellow Card, as we know, has not necessarily been authorized by some of these central banks, Ghana in particular I'm talking about. What's
Sure.
been sort of the friction between the company and some of these countries?
I think generally our regulatory engagement is very proactive. So we were actually in Kenya. We were invited by the Finance Committee to help draft the legislation that's going to Parliament this summer. In a lot of markets, it's true, digital assets have not been regulated, so they've been an unregulated area. We've been pushing for regulation.
Do you think, Craig, current market dynamics are potentially helping fuel some of that pickup, as you're mentioning? Of course, we're seeing in the U.S. There is adoption or regulation that's making its way through Congress. Of course, geopolitical developments, currency volatility. I mean, how much of that is sort of leading to what we're seeing in some of these countries?
I think it's all leading to that. And if you look at the market dynamics, right, in the last year, 70% of African economies have faced crisis levels of U.S. dollar liquidity. Like it or not, right, the U.S. dollar is used predominantly for any type of intra-Africa payments. In fact, I think almost 80% of intra-Africa payments clear outside the continent because they're done in dollars, right? International exports and imports, all these require dollars, or now we have a proxy for dollars being U.S. dollar stablecoins.
Thanks so much. Craig Storr, Yellow Card General Counsel, joining us there to talk all things stablecoins. Craig, thanks for joining us. Now let's turn to Titus Bawuah, the CEO of Web3 Africa Group. The group is based in Accra, Ghana, and acts as a digital currency innovation hub, engaging with both public and private sector companies on the proliferation of the technology.
Doing some significant work mainly with the Central Bank of Ghana. And over the last 2 years, what the Central Bank of Ghana has done is they have worked very closely with the ecosystem. And their objective there is to make sure they have a very, very clear insight on exactly what it means to have innovation within the digital asset space. And so they worked with us in bringing together key stakeholders. We worked with them for over a year, and the objective there was to establish a policy framework that was balanced, obviously keeping to the formalities of the financial institution, the country, all the regulations that will ensure that we have a very robust industry once it kicks off.
And this is one central bank you're talking about, Del. I wonder if some of the concern is whether or not we're going to get a unified approach to digital assets across the continent, or if we will see fragmentation, and whether that's going to ultimately affect adoption.
No, actually, there's movement, right, from Kenya's central bank. I believe they've got a policy that is fully drafted and ready to launch, if not already. Nigeria has got a policy in place, although I think with some of the central banks, you know, some of the approaches they're taking could be slightly a bit more conservative. And so each central bank is very clear that this industry is here to stay.
So we're just looking at the countries that are on the global list for crypto adoption. How does interoperability fit into that?
Yeah, I mean, it's extremely important. Now, when it comes to Africa, as you know, we have the Francophone countries, and then we have the Anglophone countries, right? And so there are various different regions, and they come with different responsibilities. And so I think one thing we're very clear on is that there needs to be slight modification, but as a whole, it's super important that we do have interoperability, which is why stablecoins are so important, and seeing how they can be integrated with some of the CBDC projects that some of the central banks are thinking of launching, how we bring that together. And more importantly, it promotes financial inclusion, right, on the continent in a very, very major way for the unbanked in particular. But I think all this just comes down to obviously the innovators really want to get on with things, and obviously the central bank's job is to make sure that they create an environment that is safe for everybody.
And then what does that look like then moving forward, Del, in a best case scenario potentially?
I mean, in our case in Ghana, one of the things that we've adopted is we've established a chamber, a crypto chamber, which is basically focused on kind of consolidating this fragmentation between the ecosystem and the central bank, right? And so the Chamber of Digital Assets and Blockchain Innovation in Ghana, its key focus is to find where the gaps are